Regional economy has been slowing in ASEAN. Real growth among the ASEAN 6, that is Singapore, Malaysia, Indonesia, Thailand, Philippines and Vietnam, has moderated from 5.8% in 2012 to just 4.1% in 2015 and is likely to maintain between 4.5 to about 5.5% over the next 5 years. Now, meanwhile, weakness in the commodity market and oil and gas sector continue to haunt the office markets of Kuala Lumpur and Jakarta. In these cities, we saw rents declining more severely than last quarter. Surprisingly, rental decline was slower in Singapore, but do not expect a recovery anytime soon. The large supply in 2016 and 2017, coupled with a weak economy and the low employment growth expected, are likely to force landlords to take aggressive cuts. A short-term lack of good-grade office space in Bangkok has sent rents on local currency term rising by over 2.6% quarter-on-quarter, the highest across Southeast Asia. However, we do not think this would sustain. The larger supply of good-grade suburban offices in the coming years could add downside pressure on the rents over the next 12 months. As expectedly, the growth in the offshoring and outsourcing sector, together with new completions, lifted rents by 0.9% in Manila. Capital values across Southeast Asia office markets largely kept pace with rental movement, except in Bangkok, where yield was driven down by high land costs, plus strong buying interest but limited assets for sale. In Singapore, weak leasing demand coupled with US interest rate rise have led to yield expansion as capital values fell over 3%. So how is personal consumption impacting retail rents? Growth in personal consumption level across ASEAN is slowing due to softer demand in Singapore, Malaysia and Thailand. In Singapore, weaker tourism arrivals and overall high cost of retail operations have led to retail rents contracting. The rising affluence in the Philippines continue to support demand from food and beverage and fashion retailers, leading to continual strong gains in rents this quarter. Otherwise, the remaining retail markets in Southeast Asia remain fairly stable. Landlords in Jakarta, for example, were conscious of the weaker economic conditions and have kept rents stable. Overall, we remain positive over the retail segment in Manila. Singapore office, while has a short-term risk, remains a viable investment option. You are now up to date with Southeast Asia.